Over the past few days, we've seen a lot of confident predictions about the Dubai property market. Prices will fall, international investors are going to pull out, the cycle is over. But here's something interesting. Very few of those predictions are based on actual capital flow data. So the real question investors should be asking right now isn't, should I be worried? The real question is this. Is the fear around investing in Dubai property actually justified? Or is it being driven by headlines rather than evidence? Because when we start looking at the data, the picture becomes much more interesting. Periods like this tend to reveal two very different types of investor behavior. The first group respond to uncertainty by educating themselves. They look at data, they study how markets behave during previous crises, and they try to understand where capital is actually moving. The second group react very differently. They jump straight to conclusions. You'll hear statements like the markets will crash, everyone's going to pull out, it's the end of the cycle. But when you ask what those statements are based on, very often there is no underlying evidence, just fear. One of the most important things to understand about property markets is this. Markets do not move because people feel nervous. They move when capital changes direction. So, the real question right now isn't, are investors worried? The real question is, where is global capital actually going? Because property markets ultimately follow capital flow, not headlines. Let's look at some numbers. In 2025 alone, Dubai recorded more than 681 billion dirhams in real estate sales. That was across over 213,000 property transactions. That represents one of the most active years the market has ever experienced, which tells us something important. Dubai is not just attracting local buyers, it's attracting global capital at scale. Another powerful indicator is wealth migration. International wealth migration reports consistently rank the UAE amongst the top destinations globally for high net worth individuals relocating their wealth. Thousands of millionaires relocate to the country each year. And when wealth moves, investment usually follows. These individuals buy homes, they invest in businesses, they deploy capital, which naturally increases long-term demand for property. Dubai's property market is increasingly international. In many quarters, more than half of property transactions involve overseas investors. Capital is arriving from multiple regions: Europe, Asia, even the Middle East and North America. That diversity of demand makes the market structurally more resilient than markets that rely on a single domestic economy. It's also important to acknowledge something honestly. Periods of geopolitical tension can temporarily slow investment decisions. Not because investors suddenly lose confidence in a market, but because uncertainty often causes people to pause before committing their capital. Some buyers may take longer to complete transactions. Some investors may wait for additional clarity. And in the short term, that can reduce the speed of investment activity. But historically, when global investors pause during uncertainty, capital really disappears. It simply waits for clarity. And when confidence stabilizes, those flows often resume. This brings us back to the difference between fear and fact. Fear reacts quickly. Fact moves more slowly. Right now, there is certainly uncertainty in the world. But the structural drivers behind Dubai's property market remain intact. Population growth, international migration, global capital inflows. Those forces tend to shape markets far more than short-term headlines. And this is where serious investors often take a slightly different approach. Instead of reacting emotionally, they tend to evaluate markets through what we might call an authority ladder of evidence. At the bottom of that ladder are the headlines and opinions. Above that come market sentiment. Above that comes transaction data. And at the very top sits capital flow. Professional investors tend to focus on the top of that ladder because capital movement tells us far more about the future direction of markets than headlines ever will. The real lesson here is fear spreads quickly in markets. Capital moves much more carefully. If you hear strong opinions about whether the Dubai property market will collapse, it's always worth asking a simple question. Are those opinions based on evidence or are they based on fear? Because serious investors do not simply ask what might go wrong. They ask, where is capital moving and why is it moving there? And understanding that distinction is often what separates speculation from strategy. So, stay informed, stay analytical, and most importantly, stay calm when markets feel uncertain.